Every quarter, the most important thing a company does isn't file a document. It's get on a phone call with Wall Street and answer questions in real time. That call is recorded, transcribed, and made public within hours, and almost nobody reads it. Welcome back to the AI Portfolio. I'm your host, a CFA charter holder with years of professional market experience. This channel gives everyday investors the same tools and thinking that used to be reserved for Wall Street. Free, every week. Nothing here is financial advice. This is a research skill. Let's build it. Here's why the earnings call matters more than the press release. The press release is written by a team of lawyers and PR professionals over several days. Every word is chosen carefully. Nothing is accidental. The earnings call is different. Management has to respond to analyst questions live, on the spot, with no edits. That's where the truth leaks out. Professional analysts spend thousands of dollars on services that transcribe and analyze these calls automatically. You can do the same thing for free in about 10 minutes using the 4-prompt earnings call system. Here's where to find the transcripts. Go to the company's investor relations page and look for the earnings call, webcast, or transcript. Many companies post them directly. If not, sites like Seeking Alpha and The Motley Fool publish free transcripts within hours of the call. You can also find them on the SEC's website as 8K filings. Paste the full transcript into ChatGPT or Claude and you're ready. Prompt 1, the prepared remarks summary. Every earnings call starts with the CEO and CFO reading prepared statements, usually 10 to 15 minutes of scripted content. This is still useful, but it's the most controlled part of the call. Use this prompt. Summarize the prepared remarks from this earnings call. What were the 3 main points management wanted investors to take away? What topics did they spend the most time on? And what topics, if any, seem conspicuously absent given what happened this quarter? That last question is the critical one. What management doesn't mention is often more telling than what they do. If gross margin declined and management spends the entire prepared remarks talking about revenue growth without addressing margin pressure, that silence is information. Prompt 2. The Q&A breakdown. This is where the call gets interesting. Paste the full Q&A section and use this prompt. Review this earnings call, Q&A. For each analyst question, note whether management gave a direct answer, a partial answer, or redirected to a different topic. Identify the 2 or 3 questions where management was most evasive and explain what the analyst was actually trying to find out. Professional investors watch Q&A evasion closely. When a company's CFO suddenly becomes vague about a line item they used to discuss in detail, that's a signal. AI reads every exchange and surfaces the pattern in 30 seconds. Prompt 3. Forward guidance extraction. Guidance is the single most important output of any earnings call. It's what moves the stock price. The problem is that guidance is scattered throughout the call, some in the prepared remarks, some in Q&A, some buried in a CFO comment nobody noticed. Use this prompt. Extract every forward-looking statement from this earnings call. For each one, identify whether it's a hard number, a range, or qualitative language. Then flag any statements where management used hedging words like approximately, we expect, subject to, or assuming current conditions. Rank the guidance statements from most to least specific. Hard numbers are commitments. Qualitative language is a hedge. The more qualitative the guidance, the more uncertainty management is signaling without saying it directly. Prompt 4. The tone shift detector. This one requires 2 transcripts, this quarter and last quarter. It's the most powerful prompt in the system. Paste both transcripts and use this. Compare the tone and language of these two earnings call transcripts from the same company. Identify 3 specific ways the language has shifted, words or phrases that appeared frequently last quarter but are absent this quarter, or new language that wasn't used before. What does the overall tone shift suggest about management's confidence level? When a company goes from saying strong demand environment to we are monitoring demand carefully, that's not an accident, that's a warning. AI catches these shifts immediately because it can compare thousands of words across 2 documents in seconds. A human analyst doing this manually would take an hour. Those are your 4 prompts: prepared remarks analysis, Q&A evasion detection, guidance extraction, and tone shift comparison. Together they give you a complete picture of what management is actually saying and what they're trying not to say. Here's how this fits into the full system we've built. Episode 5 gave you the press release. Episode 12 gave you the annual 10K. This episode gives you a live call. You now have every major document a public company produces covered by a specific AI prompt framework. Your homework this week: find the most recent earnings call transcript for any company in your watch list. Run all 4 prompts. Pay particular attention to prompt 2. The Q&A breakdown. That's where most investors aren't looking, and that's exactly where the edge is. Post the most interesting evasion you find in the comments. I want to see what you catch. Subscribe if you haven't already, and I'll see you in the next one.